All right. Thank you all so much for joining. It sounds like there was a great session going on over there, and I know we have some people trickling in, so we're just going to get started in just about 30 seconds to a minute or so. Is when we'll kick things off. So just for housekeeping, I'm Dave from Techstars. I'll be moderating and ushering our presenters today from their backstage up to present. And we've got about 5 minutes for each of these companies. We've got 7 companies in total. And then after that, we'll be sending you guys back to the main stage and then the opportunity to meet each of the companies at the expo as well. So just hang tight. We'll give it another minute or so to let some people join, and then we'll get things kicked off. Thanks. Great, and so we're gonna get things kicked off. We're gonna start with Heidi from 12. So I'm gonna bring Heidi up, and we'll go once everything is all set. Hey, Heidi.
Hi. Can you hear me?
I can. I'm gonna add
Great.
deck up, and I'm gonna disappear. And see you in 5.
All right. Hi everyone. Good morning, and good morning to everyone, or wherever you are. Good day. My name is Heidi Lim. I'm the director of product ecosystem at 12, formerly Opus 12. You might have heard of us before. And we are a tech company based in Berkeley, California. We've developed a technology that transforms carbon dioxide into chemical building blocks for chemicals, materials, and fuels. At a very high level, our technology takes CO2 and water as inputs, and we use renewable energy to split up those molecules and then rearrange them in the presence of a novel metal catalyst to produce these products that are typically made today from fossil fuels. And with that, we see an opportunity to transform about 2 to 3 billion tons of CO2 into products that today make up about a $300 billion petrochemical sector. So being able to transform the carbons in things that we have in our modern world that we're used to in everyday life. So these are our 3 founders, Kendra, Itasha, and Nicholas. Kendra and Itasha were at Stanford doing groundbreaking research on CO2 electrocatalysis, which is the basis of our technology. And they published this paper back then that showed that there are 16 different chemicals that can be made from CO2, going from a single step from CO2 directly to one of these other higher value molecules. And so they decided to turn this into a commercial and eventually industrial system, because the implications for climate and addressing emissions is massive. Since then, we've reached over 60 people on our team, and we have been expanding our lab in Berkeley, California at our headquarters. So we have a focus right now on 2 molecules in particular. So the first is carbon monoxide, or syngas, and this is the basis of many different materials, such as polycarbonate, which is like the headlights on your car. You can think of that kind of hard plastic material. Polyurethane is made with CO as well. So that's the foam in a running shoe or the foam in like a seat cushion. And then we can also make fuels from CO as a building block. So jet fuel being one of them. Certainly aviation is a big interest right now in sustainability. And then we are developing a pathway to ethylene as well, which is a basis for many chemicals, polymers, plastics, lots of different materials today. And worth noting that oxygen is a byproduct of the process as well. So we are kind of replicating we're essentially making industrial photosynthesis. And so ultimately, you can imagine flying across the Atlantic Ocean on a carbon neutral flight, wearing clothing and carrying items that are made directly from carbon dioxide, and effectively being able to kind of move that carbon dioxide out of the atmosphere or out of kind of free moving areas and put it into a durable good. So our technology is this membrane, which is where the catalyst sits. We're actually taking an existing technology design called a water electrolyzer. Many of you are probably familiar with them, and transforming one part of that technology, which is the membrane that goes into it. And in doing so, we're turning a water electrolyzer into a CO2 electrolyzer. And we chose this architecture because they're highly energy efficient. They're also low temperature and low pressure, and can load follow renewable energy sources, which is important. And we've partnered with one of the world's largest water electrolysis companies in the world to make our full systems and integrate our membranes. So today we have our first small-scale commercial systems, which is like number one here. We have these smaller units. They're about the size of a dishwasher. Right now we're scaling up to our first industrial units, which will be, that unit will be the basis for single-digit tons per day CO2 consumption per system. And then those will be the Lego block for larger plants where we're addressing hundreds or thousands of tons per day of CO2 in one location. And that is how we can ultimately displace fossil fuels in our today's carbon supply chain. We have a number of partnerships also that we have been rolling out. So last year we produced the world's first automotive part with Mercedes-Benz, first automotive part made from CO2 with Mercedes-Benz. And that's one of many different materials and parts that we can impact in a typical vehicle. Including electric vehicles. They will continue to need polymers in those vehicles. We're also working on fuel side. So we worked with Shell. We've also demonstrated a pathway to ethanol with LanzaTech, and we're working with the Air Force in the US to deliver jet fuel as well. You may have seen that we've also announced we're working with Tide, Procter & Gamble. We're going to be replacing an ingredient in Tide with our CO2 made ingredients or materials or chemicals. And so this will be one of our first pilots towards that direction to show how our chemical formulations can impact also household goods and things that were very common in our homes. And then we ultimately think about our carbon impact in two ways. And this is kind of a breakdown of that. So what you're seeing here is that for every ton of product that we make, we're impacting CO2 in two ways. We're both converting it directly as feedstock, and we're avoiding CO2 emissions that are relevant for conventional production of that molecule. So for ethylene, we convert about 3 tons of CO2 for every 1 ton of ethylene we make, and then we're avoiding emissions, fossil emissions, about 1 to 2 tons of CO2 per ton of ethylene made. And so that's how we get to this pretty big carbon benefit of using our technology. Ultimately, we sit in this kind of nexus. We sit in the middle of 3 big categories: companies that need to reduce their emissions, companies that need the products that we can make, and then large-scale renewable energy companies. And there's much overlap across all 3 of those categories, of course. And that helps us to have a pretty broad reach, that we're connecting all these areas in supply chains that don't typically exist today, but creating a CO2-based economy in doing so.
All right, Heidi, I'm gonna give you about 10 seconds to wrap, and then we'll.
Okay. Thanks. So we've raised over $75 million between private, public funding. We just raised a Series A, $57 million Series A. We're looking for more commercial partners and as customers as well. So here's my contact info right at the end here. Looking forward to meeting you in the breakout, hopefully. Thank you.
Awesome. Thank you so much. And you all also have the opportunity to meet with all these entrepreneurs in the expos as well. So next up will be Erika from Techstars Labs, and I'll be bringing you up. There we go. I think we're all good. All right, I'm going to disappear and see you in 5.
Great. Thanks, Dave. Hi, everyone. Good morning or afternoon, wherever you are. I am Erika Randolph. I'm the Director of Sustainability at Techstars Labs. And today I will share with you how we're using remote sensing, machine learning, and cloud computing at scale to help commodity-intensive companies address ESG considerations in the short, medium, and long term. I'll start with a very brief background on our company. Descartes Labs is a geospatial intelligence company with science and technology at our core. We launched out of Los Alamos National Labs in 2014, and we build models of the Earth that enable commercial and government organizations to harness the power of geospatial analytics in order to better understand and reduce their impact on the physical world. We serve the world's largest consumer products, agriculture, and mining companies, as well as the US Department of Defense, through direct access to our geospatial modeling platform, custom-built solutions built by our team of PhDs, or packaged analytics that feed directly into your existing operational workflows. By leveraging the world's data, we believe that sustainability and emissions reduction can go hand in hand with enhanced operational performance. So our approach combines a diversity of data sets that are continuously updated and co-registered by location and time, and we use this system to deliver fully operational supply chain solutions at planetary scale by continuously measuring critical supply chain factors that are otherwise difficult to quantify. And we have elected to apply our technology to the world's most urgent problems, namely the climate crisis, which is what we are here to talk to you about today. Just a view of some of our capabilities here. When combined together, we can cover the full spectrum of sustainability and operations for commodity-intensive companies. This approach promotes environmental and social responsibility while also delivering operational efficiency, all of which are key pillars for a modern-day ESG strategy. So let's shift our focus to net zero. We know that the agriculture, forestry, and other land use sector comprises nearly a quarter of global greenhouse gas emissions. Yet land use change and emissions are not universally included in net zero reporting. We see this as a massively unaccounted for emissions component that represents both huge opportunity and huge risk for commodity intensive companies with land use and land change in their greenhouse gas footprint. Opportunity in the sense that tools exist now, like what I'm sharing with you today, to help companies monitor, verify, and report this component of your footprint, and risk in the sense that there are billions of dollars of land use and land change carbon liabilities that voluntary standards and future regulation will soon require companies to account for. So I'm going to dive into one specific application that addresses this need, which is our global tropical deforestation monitoring system. Here on the screen, we see an example of our detector at work in Indonesia, where a significant amount of primary forest has been cleared to make way for oil palm and other plantations. We know that over the past 20 to 30 years, deforestation monitoring has gone through an evolution. Original on-the-ground monitoring programs were prohibitively costly and inefficient, and later optically based monitoring systems can struggle to achieve timeliness due to the prevalence of clouds in the tropical regions where commodities are grown that drive the majority of global deforestation. We know this to be for major commodities. Descartes Labs' radar-based detection system delivers alerts on average 106 days earlier than optically based systems, and includes really important features that enable the actionability of the insights that you're seeing on the screen. So this includes measuring the forest carbon equivalent of deforested land, enabling companies to target action based on high conservation value and high carbon stock forests. I have 1 minute left, so I'm going to cruise through this quite quickly. We're looking at the above ground biomass density of a forest on the island of Borneo with the highest carbon density in bright yellow. We zoom into a select region, and we can see, going back to January 2018, so before this area in Borneo has lost 16,000 hectares of forest. That amounts to 1.8 million tons of molecular carbon, or 6.6 tons of carbon dioxide equivalent. If offset at a very conservative price of $10 per metric ton, that would cost $66 million, over $1.7 million per month to offset. And we estimate that more than 2 metric tons of carbon dioxide are lost per month in only this subregion associated with this one commodity. Companies will soon need to account for these emissions on their path to net zero, and we want to work with you on this. So this is my last slide. My contact information is here. This is one example of the global land use and change monitoring that can be powered by the Descartes Labs platform. My question to you is, how are you accounting for the land use component of your GHG footprint? I thank you all for your time and look forward to discussing further with you today. Thanks, everyone.
Thank you so much, Erika. It's great. And again, reminder, you'll have the chance to chat with all of the startups in the Expo Lab or the Expo following this.
Thanks, Dave.
Of course. All right. Up next, we have Bryce. I'm going to bring you up. And do you want to go ahead and share your screen?
See if this works.
And if not, I do have your deck ready. So if all goes to and great. See it.
Is that working?
It looks good. I am going to disappear, and I'll see you in 5.
All right. Let's see. It does not want to play, but I don't think it matters. We got 5 minutes, so let's roll here. Morning or good afternoon, everybody. My name is Bryce Smith. I'm founder, CEO of Level 10 Energy. We exist to bring frictionless transactions to the utility scale renewable energy space. So we bring buyers and sellers of utility scale energy together using software and standards and marketplaces, trying to expedite these transactions. And I'll talk a little bit about why. This is probably fairly obvious to everyone. Does not want to advance. So there we go. All right. So looking at Biden's carbon-free grid initiative, for instance, by 2035, if we were to achieve that, we'd have to move from 10% renewables to 60% renewables, and that would require us to increase our investments to about $1 trillion a year. And although we have come a very long way in procurement of renewables, we still have quite a ways to go. You know, we've gone from early stage innovators, Google, Amazon, Microsoft, a lot of big tech companies, really paving the way for other buyers, which is terrific. The industry is beginning to scale, but every transaction is still done bilaterally by hand. Every transaction still involves a consultant, and that's no way to scale an industry. So what we do is create the infrastructure to bring buyers and sellers together much more efficiently, you know, using software and like any good marketplace, we provide transparency and liquidity and standards and so forth on this path towards maximum growth for the industry. We have 4 types of participants in our marketplace. We have all the suppliers. So all the large scale wind and solar developers. We've got, I think, 505 solar, wind, and storage developers on our marketplace in 21 countries, US, Europe, and 19 countries in Europe. Demand, these are large corporate buyers. These are utility buyers, utility-like entities. They've procured about $5 billion in new renewable energy through the Level 10 platform over the past 3 years. We used to sell primarily directly to end users, to customers. Now we primarily go through channel partners. So we have about 30 channel partners, the Deloittes, the Accentures, the consulting behemoths of the world who have hundreds and hundreds of customers that need to execute on their sustainability plans. They're using the Level 10 platform to execute on those deals. And lastly, the capital. We found ourselves all of a sudden with data essentially on every single wind, solar, storage project under development in the US and Europe. And we got a lot of inbound from financiers who wanted to build, own, operate, manage those assets. And so we started an asset M&A marketplace. And we've got about $9 billion in asset transactions running through that marketplace. We are lucky to be the platform for the world's largest energy buyers. You can see some of the folks that use the platform directly on the left, and then some of our channel partners on the right who use Level 10 as infrastructure for their procurement needs. Same thing on the asset M&A side. They're some of the most sophisticated financiers in the world, buying, selling, owning, operating these renewable assets. So just a couple quick examples of what the platform actually looks like. As a buyer, you can log in and you can see every asset under development in a certain region. You know, if you're Google or Microsoft, you have the clout to call every developer and get this information. But if you're anybody smaller than that, this is really tough to do. So the platform has, in essence, democratized renewable procurement. We're running 1 billion calculations a day to estimate risk and value. This has all been done previously in Excel, which is really impossible to do. So having a buyer actually understand what they're getting into when they enter into a 10, 12, 15, 20-year contract is super important. We have digitized the RFP process, taking it from 6 months to 2 weeks, because what this industry really needs is speed and scale, and we can't, we can no longer take 6 months or 12 months to get a deal done. So that's our renewable procurement and asset M&A platform. Last piece here, performance monitoring. Once you enter into a big transaction, presumably your companies are going to be creating portfolios over time. We allow them to understand the energy production, the economic performance, the environmental performance historically, and constantly mark to market over time. So appreciate the time. That's what we do, and hope to speak with some of you in the breakout rooms.
Awesome. Thank you so much. Fantastic. Thanks, Bryce. And again, my regular reminder, you'll have a chance to meet with all of these fantastic entrepreneurs in the breakout rooms coming up. And next up, we've got Grant. I'm going to toss you up, Grant. Got that. We've got the slides, and I'm going to remove myself, and I will see you in 5 minutes.
All right. So my name is Grant Canary. I'm the CEO of DroneSeed, and now also Silvaseed, which is the largest private seed bank for temperate conifers on the West Coast. A little bit more about that acquisition here coming up. But basically what we do is we utilize heavy lift drone swarms to reforest after wildfires. And with Silvaseed, we supply seeds, millions of seedlings, and then also finance everything with carbon credits. So our mission is to make reforestation scalable and become the world's largest generator of carbon capture credits. We plant a lot of trees globally. We lose a lot of trees to fire each year, and that 10-year rolling average is increasing. 82 to 92 is 2.7 million acres. We're now up to 7 million acres. And for reference, New Jersey's around 5 million acres in total land. So this is going up due to the size and severity of wildfires fueled by climate change, and natural regeneration is decreasing. And this is the thing a lot of people don't know, which is that high school bio, forest burns, forest regrows. Well, similar to glaciers, similar to coral, we're now starting to see that fall off, and natural regeneration is occurring less and less. It used to occur about 91% of the time. Now we're starting to see early data sets that, depending on the ecosystem, that could be as low as 60% or as low as 40%. So when we see that natural regeneration decreasing and the supply chain is capped for humans being able to reforest, we simply run out of forest to burn. And we end up with 10-foot tall shrubs, persistent early cereal phase. So there are 4 obstacles to reforestation and how we solve them. Number 1 is labor needs better tools to scale. So this is where we started with DroneSeed. This individual here has about 40 pounds of 1 2-year-old trees in those bags on his hips. They're coming from a nursery, and he'll burn the caloric equivalent of running 2 marathons every day. So the diets of these superheroes are absolutely just insane. They put Michael Phelps to shame. Second problem here is seed supply. So there's a lack of supply. Industry and government don't have seed for customers. We've been relying on orchards. It takes 20 to 40 years to spin up more orchards, and we have not planned for climate change. So we need a 6x increase in supply nationwide. A recent paper came out that was covered by Wired and American Forests, amongst others, on that. And then there's no nursery space. Even if you had seed, there wouldn't be a place to grow it right now. Many nurseries right now not even taking new orders till 2024. And the reason for that is it takes a long time to grow. You send the seeds in, you grow for a year or two, you send them in a refrigerated supply truck, you hire somebody to hire that labor to get them out there. That creates a long supply chain, and it gets backed up with big fires, and it's only going to get worse. So that's been covered by Fast Company and Nature Conservancy there. And then lastly, more money requires more trees. More trees requires more money. Previously, carbon credits didn't support reforestation out of a abundance of caution and not wanting to be perceived as greenwashing. There haven't been credits for reforestation. You had to wait 25 years for the trees to grow, then you can get your credits. Well, that means you had to compete with 25 years of compounded interest, so nobody did it. So that's changed in the last 2 years with ex-ante credits. They're carbon credit future. It's a standard that's run by Climate Action Reserve, an independent methodology group. Vera and Gold Standard, other groups similarly following suit. But basically what it does is it forecasts how much the trees are going to be capturing over the next 100 years. There's an easement put on the property. It's verified by a third-party independent verifier, and that is the methodology. And that is opening the gates to being able to fund reforestation. Carbon credit market's a very large market. Majority is EU. Washington is joining California and adding a market, and Canada just won a 2-year court fight for the national market. And we see 23% of S&P 100 pledging to go carbon neutral or negative. And there is scarcity, which is driving the price and thus the market size. In fact, I would say most of carbon credits are cap and trade. Only about 2.4% actually offset or capture carbon. Most of those projects are small, 300 to 600 acres of forestry equivalent. They're not all forestry. The large projects are forestry, and they're largely easements on existing stands of trees. That's great. It protects the trees, but it's not necessarily adding additional carbon capture capacity. And nobody's doing this at over 10% of the market. And there just isn't the supply. So remember, 23% of S&P 100 pledging to go carbon neutral or negative. Microsoft's carbon footprint is 13% of the offsets that are capture or offsetting. So what we've done is we've built a vertically integrated reforestation operation. The drone swarms, we utilize heavy lift drone swarms. They carry a 57-pound payload of seed vessels. They operate in 3 to 5, and they're 6 times faster over the terrain today. So that's the better tools for labor. With the acquisition of Silvaseed, we're now the largest private seed bank in the Western US. So we actually have seed, and that's important because nothing happens without seed. And we're growing millions of seedling and doubling that production capacity, which is important because if we're going to have more carbon credits, we're going to be able to need to do actual reforestation. And then we're pioneering some of the first ex-ante carbon credit projects to alleviate the supply issue. So we'd love to have conversations about those carbon capture credits. They are under the Climate Action Reserve's Climate Forward, and they are scarce. So yeah, we'd love to talk about that. They'll be coming online in the next year. With that, I will wrap.
Great. Thank you so much, Grant. Appreciate it. You'll have the opportunity to chat with all the entrepreneurs coming up in the expo. Up next, we've got Julia from NCX, who is going to talk to us. Thanks, and I'm going to disappear.
Awesome. Hi, everyone. Good morning, good afternoon, wherever you are. My name is Julia Osterman, and I lead business development at NCX. We're a data-driven forest carbon marketplace that's connecting net zero pioneering companies to high-quality forest carbon credits at scale, sourced from America's largest and smallest landowners. And to understand NCX, I want you to meet the Oaks family. The Oaks family is a multi-generational family in Pennsylvania that owns a few small tracts of timber. And every few years, they cut their timber to pay for the cost of their taxes. And before NCX's program, they had no alternative income for their forests beyond the timber there. You see, it takes about $200,000 in 2 years to set up a forest carbon offset project. And as we just heard from Grant, there's increasing demand for these forest carbon credits, but small landowners like the Oaks family weren't able to participate because of the high setup costs and the long time it takes. But thanks to NCX's program, the Oaks family could be paid to grow their forests longer, sequestering more carbon and being part of the climate solution. And there are millions of landowners across the United States, just like the Oaks family, that to date haven't been able to participate in forest carbon markets. All this green that you see here represents those non-corporate, non-industrial family forest landowners that couldn't participate in forest carbon markets. But thanks to NCX, the Natural Capital Exchange, we're using remote sensing, machine learning data to create a platform where landowners like the Oaks can enroll at no cost to them and be paid to grow their forests longer. So we're democratizing access to forest carbon markets, generating high quality carbon credits at scale to support companies' net zero ambitions. And we're using that data and technology to also improve the quality of forest carbon credits, making sure that these credits generate real climate impact in this critical decade for our climate. And how do we do that? Well, NCX's program is built on BaseMap. BaseMap is our high-resolution forest inventory map that measures every acre of forest in the US, down to the individual tree and species level. So with that information, those acre-level insights on the forest composition and structure, we can measure the carbon values, the timber values in every acre of forests, creating a platform where landowners can enroll at no cost to them. And then we can measure and monitor the impact of their participation over time to ensure that we're generating real change on the landscape. And we use remote sensing, machine learning, statistical models, and field measurements to create those acre-level insights. Now, we started with a pilot program with Microsoft back in 2019. It wrapped up in 2020 with 68,000 acres in the state of Pennsylvania. The Oaks family were one of those participants. And that was acreage ranging from 20 acres all the way up to 20,000 acres, transacting 7,000 tons of carbon credits. Fast forward to spring of 2021, where we had our commercial scale launch. We had 9.5 million acres enrolled across 11 states in the US South, with 100,000 tons of expected climate impact. Fast forward again to this summer, we operate in quarterly exchanges. We had 5 times the volume, more than 500 landowners across 16 states enrolled in the program and are being paid to change their forest management behavior to sequester more carbon, with 500,000 metric tons of CO2 equivalent expected impact. We had 13.5 million acres enrolled across those 16 states. So that's 13.5 million acres, almost the size of the state of West Virginia, worth of landowners signing up on our platform. And you can see the massive scale of impact from this map here. Now, we're not only using our data to create a platform that can engage forest landowners and pay them to sequester more carbon and be part of the climate solution. We know that forests are valuable beyond just the timber and the carbon that exists there. So we're using our acre level insights to measure co-benefits and values in forests beyond the timber and the carbon, such as wildlife habitat quality, as you can see here. So this is a picture from our impact dashboard, which we provide for customers to tell the impact of their purchase, where they can invest in not just forest carbon and tell the story of that impact for also the landowners that exist within the project, but also using those acre level insights, pairing with ecological models to understand how those investments in forest carbon in a quantitative way are impacting habitat quality for different species that we care about. So now we're sourcing carbon from all lower 48 states. Our next exchange is in December of this year. So it'll be open to landowners across 48 states. We're enrolling landowners every week, and we're also engaging with buyers, such as the ones that we've had to date join us: Rubicon, Microsoft, Patch, South Pole, and Cargill. And we're excited about how they're joining us, as well as others, to invest in massive climate impact at scale in this critical decade for the climate. So if you'd like to learn more, please feel free to reach out to me. We'd love to speak with you about how we can support your net zero ambitions, how we can help you partner with local communities and forest landowners across the country and beyond to support major climate impact in this critical decade. Thank you so much.
Thank you so much, Julie. I appreciate that. And fantastic. Again, you'll have the opportunity to chat with Julie and the others coming up in the expo later on. Up next, we have Justin. Bringing Justin up right now. And Justin, if you want to share your screen, I also have your deck up if we have any technical issues. And Justin is from Simudyne.
Can everyone see my screen? Great. I hope everyone's doing well today. So I'm Justin Lyon, the founder and CEO of Simudyne, and we're helping organizations to measure their climate risk and to develop firm-specific mitigation strategies. So Simudyne, we're an enterprise-ready, agent-based modeling and simulation software development kit, and we're used by organizations to solve complex problems and make better decisions by creating foresight as to the likely trajectory that their organization is going to face as climate change is changing. We do that by integrating modeling and simulation into the fabric of their decision-making. And when you do this, you're able to train intelligence, whether human or artificial. And that really allows you to evaluate a number of different scenarios to enable fast convergence across the organization onto the best outcome. And that drives better strategic execution and operational performance. Climate change is widespread, it's rapid, and it's intensifying according to the IPCC's most recent reports. And importantly, everyone knows that computer simulations are the foundation for understanding the likely impact of climate change, and importantly, to identify the mitigation strategies that would work across the globe at nation level, but also importantly and increasingly at the firm specific level. And that's been brought to life by one of our partners, Deloitte. I'll be talking as part of the demo here about the specific example and work that Deloitte is doing using our toolkit, using our simulation platform. And Stephen Weston is the partner in risk advisory who is doing that work. And what he's done is he's been able to integrate climate and finance risk scenarios to develop a number of different flexible mitigation strategies for their clients. And the way they do that is by first identifying potential climate-related exposures. Then they start to develop climate-related scenarios. And then most importantly, perhaps for the firms, is to be able to assess the financial impact. And what this means is that they are taking climate impact models from the literature, looking at things like changes in temperature, changes in sea level, changes in precipitation, and so on, using those as translating those into financial impacts, which then are able to shock models that they've built of the real economy that look at specific industrial firms, consumer firms, the consumers themselves, and then that is also then used as an output from that real economy model into the financial economy model, which starts to look at banks, insurance firms, hedge funds, exchanges, clearinghouses, and so on. And today I'm just going to do a demo of one of the very specific elements of what they've done, which is looking at clearinghouses and stock exchanges. But importantly, this whole system that they're building on top of our software allows them to look at the impact on a specific firm, the P&L, the balance sheet impacts of different mitigation strategies, or looking at financial services industry like banks, insurance companies, and so on. And the preliminary results are excellent. They're using these these models and simulations to generate realistic climate scenarios very quickly. And it's providing planners, policymakers, and finance professionals with greater insight on how to build climate risk hedging strategies. In terms of a quick video of this in action, this is our software running the part of the model for looking at clearinghouses. This would be things like the London Clearinghouse, part of the London Stock Exchange Group, or the Chicago Mercantile Exchange, or the Hong Kong exchanges. And what you're able to do is see the simulation running in the web browser. If I just sort of advance quickly, you can see this is the integrated development environment that allows Deloitte or firms to download our software and use it to build their own models and then simulate those models to explore how different intervention strategies might play out. If I sort of advance forward a little bit more, I can start to see the different charts that are being generated. I can take us forward a little bit more to see the actual system running. And the important thing about this is that all of these simulation results are displayed and run through a web browser, which allows non-developers to basically test drive their various decisions, basically roll out different strategies to see the impact on the balance sheet. And then we also store all of this simulation data as large data files using Hadoop and Cloudera technology, and then that can be brought into all sorts of different data science workflows. Looking at it in things like Jupyter Notebooks and so on. The way we work is, we're software, so the vast majority of firms just download our software, install it, and they just start building their own models. In some cases, we partner and train them on how to use our software. So we offer something like 10 hours of training, and then that's enough for people to get going. And the last thing, of course, is in collaboration with Deloitte and with the MITRE Corporation, we're able to actually provide the professional services in collaboration with them to help organizations build their own models and understand the impact on their firms of climate change and what they might do to help. We're working with a lot of different organizations. Here's just a handful of them. The London Stock Exchange Group is a fascinating use case that we've been talking about, and there's a really interesting white paper that they've written under the Refinitiv brand. If there's any questions, I'm happy to take them in the breakout sessions. Thank you very much for your time.
Awesome. Thank you, Justin. And once again, everybody will have the opportunity to meet with these great entrepreneurs coming up in the expo session. Last but not least, we've got Teo from Max.
Great.
Fantastic. And do you want to share your screen?
Yeah, I'm doing that right away.
Awesome. All right. We're all set. Thanks.
All right, fantastic. Hi, everyone. My name is Aditayo, co-founder and CEO at Max. At Max, we're delivering low to zero emission vehicles to drivers across sub-Saharan Africa. Founded the company a few years back at MIT with a couple of co-founders, and ever since we've been scaling access to our highly efficient vehicles to gig drivers and commercial drivers across sub-Saharan Africa. So the problem we're solving is there's an exciting opportunity around mobility in Africa. It's a $250 billion market growing very quickly, 4.4% per annum, and is on track to hit about $400 billion by 2030. So it's a fast-growing industry. Electric vehicles are the opportunity for electric vehicles is increasing, accelerating very quickly as well. But there's a bunch of challenges. Today, about 90% of drivers are excluded from the credit economy. So that means that gig drivers, for the most part, have to rely on informal networks to be able to access mostly low-quality vehicles. They're typically very old vehicles and typically very energy inefficient. 90% of these drivers also have no access to any form of insurance. So that means if something happens to them, they're pretty much left on their own, right? And as a result of this, broken our system for gig drivers, at least 50% of users have to endure highly unsafe and highly unreliable transportation. So the types of vehicles we're talking about here cut across both the 2 and 3 wheel vehicles and also 4-wheel vehicles, including minibuses and taxis. Our 2 and 3 wheel transportation is very common in sub-Saharan Africa just because it's much easier to navigate across mostly unpaved roads. Now, one of the big challenges that are facing the continent today is the rapid growth in 2 and 3 wheel vehicles, right? And these 3 wheel vehicles, for the most part today, are gas engines, are not very, very efficient engines. So within the next 10 years, in less than 10 years, our 2 and 3 wheelers would explode in Africa, and that would essentially increase our emissions to as high as 2.3 billion tons of CO2 per year. That's huge. Just to compare, as a way to drive the point home and give you a sense of what we're talking about here. Today, the emissions from all of the 2 and 3 wheelers in sub-Saharan Africa account for roughly around the total number of emissions you would have from about 50,000 737 planes, right? If it continues the way it is, that number would essentially double within the next 10 years. Now, for fact, there's only about 10,000 737 planes in the world operating today. So essentially, we're talking about 10x the number of 737 planes. I'm assuming every single one of them is flying every single day. That's the sort of emissions we would see from 2 and 3 wheelers across sub-Saharan Africa within the next 10 years if we don't fix this problem. So how is Max fixing this problem? It's very simple. We're providing drivers access to low to zero emission vehicles, highly energy efficient vehicles, mostly electric vehicles. And we're also bundling insurance and reg tech and permits alongside the subscription for the drivers. So they don't have to rely on family and friends or on informal fleet owners to be able to access the vehicles that they need to make money. And alongside that, we're providing charging infrastructure in partnership with our solar energy operators and retail stations to ensure that these drivers have access to the battery swapping infrastructure that they need to be able to swap out their batteries and have very high uptime. So this just gives you a sense of what the drivers typically get from Max. So they get access to vehicle subscriptions, they get credits, they get energy as well, and they also get healthcare bundled alongside the products that we deliver to them. So pretty much what Max does is to help these drivers maximize earnings by delivering much more efficient vehicles at an affordable price, right? And also reduce costs for them. So it's very simple. The drivers pay as you go. They pay daily subscriptions. They go to a charging station, swap out their battery, and off they go doing their daily business. This just gives you a view of what we do with the drivers. We typically have contracts in place for them that's customized to their needs. They can access the vehicles on demand. And also, we've implemented digital payments infrastructure that allows the drivers to be able to pay via their wallets. But also for drivers that want to pay cash, we've got a platform that enables them to convert that cash into wallet balances through a distributed agent network that cuts across the markets we operate in. We also get a ton of data on the fleet spread across the cities we operate in. That allows us to provide much better experience to the drivers so they can access vehicles when they need them. And so customers can also access these vehicles the moment they need to match with the driver to move them around. We've grown, 7x in 2020. We have over 13,000 drivers onboarded, deployed over 4,000 vehicles on the platform, and we're launching new cities, every single month. So last but not least, we've got very exciting margins, as high as 50% margins on the business model we operate, much better than what you might be familiar with Uber and Lyft and other ride-hailing companies, while at the same time reducing emissions for the industry. So that's pretty much it. Look forward to interacting with you guys in the booth.
Awesome. Thank you so much. And that will wrap all of our sessions. So if everybody wants to head to the main stage, there'll be a quick debrief before the expo booths wrap up, or once again, you'll have the opportunity to chat with all of the founders who've presented today, ask additional questions, as well as make connections as well. So thank you all so much for joining. And if you'll just head on to the main stage now. Thanks.